A lot for joining us. So some of these names are doing well. Like I pointed out, if you see the top F&O gainers now, this Hindustan Aeronautics as well, I think, which was Mitesh's pick, is also up about 3%. Vedanta is moving 2% higher. And keep an eye on names like Nalco, Coromandel, a couple of other stocks also doing well. Aditya Narain is now joining us, head of research at Edelweiss. Aditya, good morning. Thanks much for joining us. We are back to all-time high on the broader market after that shakeout that we had in August. Your thoughts on how to approach this market now?
Good morning, Anuj and team. This is quite a high. I don't think we've seen such highs for a fairly extended period of time. And in many senses, it's not just a global equity run. We have outperformed emerging markets very, very sharply. So I think in that context, quite honestly, between the huge outperformance we've seen relative to other EMs over the last couple of months, and the fact that earnings data has been decent, but it's not something that has beaten expectations. My view is that one needs to be a little cautious at these levels. There isn't enough tailwind from underlying earnings or underlying economic momentum to justify the kind of move that you've really had so far. So quite honestly, I would be a little cautious on the market. I would be in sectors where demand is much, much more obvious and visible. In many senses, I wouldn't be putting more money in. I'd be just sitting back a little bit.
Okay, don't put more money, sit back a little bit. By the way, this is some important information on what's happening. With this whole telecom situation. Kumar Mangalam Birla, according to sources from my colleague Ashmit Kumar, says that he will be meeting the telecom minister, Kumar Mangalam Birla, that is, and to discuss the health of the sector. Whichever way it goes, one thing is for sure that perhaps we are headed into a duopoly as far as the telecom sector is concerned. So little minor relief is what Vodafone Idea is seeing on the paucity of government intervention into what's happening with Vodafone. But let's see how that plays out. Aditya, hi, good morning. Your caution is taken on board. But the one thing that we've seen over the last 12 months is that none of the headwinds, so-called headwinds in this market have materialized, whether it is COVID, the impact on the economy, the fear of inflation, the higher bond yields. The headwinds existed, but it didn't reflect on the markets. Henceforth, what do you think could be the biggest, sort of factor that could derail this market here on?
In many senses, I think just the pileup of headwinds will probably potentially be the biggest risk rather than one specific additional headwind that might come in. The fact that at some level, economic momentum, economic consistency has been chipped away by these headwinds that you referred to. I would just say that the adding up of all of those would really be where you will see a little bit of a block. And which is where the markets might struggle to clearly maintain this kind of momentum, but at some level even maintain these levels, right? So I would say instead of looking out for the next big risk factor, you just have to sum up what some of these challenges have tended to play through and look at their impact as it tends to add up, right? I think what tends to happen is that when markets are doing well, a lot of the commentary around the data seems to veer around to everything that is positive, right? And I think you need to just balance it out a little bit because some of these numbers are good, much better than what one would have thought 12 months ago. But relative to where they were a couple of months ago, or relative to some of the expectations that seem to be built up, they're okay, right? So I think in that context, rather than there being a single straw that metaphorically breaks the camel's back, it could just be a question of some of these piling up, and that beginning to show through, whether it is in demand, whether it is in investment, whether it is in purchasing power. I think that's what one needs to watch out for. But as I said, I think it's not an event or a big drop that you're potentially sitting on, but just that a lot of this adds up and you just find the economy earnings being a little slower than what is being factored into stocks at this point in time.
By the way, these lines are really important, and we'll get Ashmit in the next couple of minutes because his sources are saying that the government is considering demands for relief measures, and the government seems to be indicating that the relief obviously will not be company specific, it will be targeted at the entire sector. We'll get Ashmit in on this important story in the next couple of minutes. There's a little bit of a lift up on Reliance as well. Last I checked, Bharti was absolutely flat, but Reliance is about 0.5% up. It's opened absolutely flat. There's a bit of a build up now on RIL as we speak. Aditya, good morning. So, everyone's trying to sort of second guess the end game for Vodafone Idea. Is it going to be a duopoly? Will some white knight come in? No one knows. Let's see where these negotiations go in New Delhi. But your thoughts on the sector? And I have a more fundamental question. Mr. Sunil Bharti Mittal said 200 rupees ARPU by the end of the year. Do you think that's actually possible? What could be the next triggers if one is looking at, a medium-term take on these stocks? And are you positive on them?
So I think quite realistically, so let me just put it in 2-3 ways. Right? In terms of making the call, in terms of how this will play out from a regulatory perspective, I'm just not the right person to dig into that space, right? I think that's one element. I think at a broader level, from an economic good perspective, do you want a slightly broader playing field, or do you want it to be a duopoly and a relatively narrow field? I would say, while it might benefit a few stocks if it's narrower, I just think for the so-called greater good of the economy, greater choice, greater investment capability, I'd rather it be a 3-player or more market than a 2-player market, right? Even though from a stock perspective, it might work very well if it's the narrower the market is. And the third perspective is in terms of your question, whether you can get up to 200 rupees. I think you can. I think at the end of the day, competition and market share is what has brought tariffs to the levels they are at. And I do believe that if, particularly with 5G investments coming up at some point in time, I do think there is the market's ability to take slightly higher prices. And I think that is something that will eventually play through. At the end of the day, I think a lot of, particularly for pipeline industries or infrastructure industries, as this might play through, I think there has to be a balance between, customer good, between corporate profitability and the ability to invest. And I think that you will probably find if there is slightly higher tariff structure, but at the same time, it stays low enough for people to use data just very, very freely, which they're doing at this point in time.
Okay, by the way, Nimesh was alerting us in D-Street Chatter about the, pending block deal on Aarti Industries. That's happened, I guess. I think that perhaps would take away that supply overhang which existed on the stock. It's underperformed its peers. You've seen a big rally play out in the chemical space, not as much in Aarti Industries because there was this headwind of this potential block deal which existed. Now that's out of the way. So it could be interesting to track the stock through the day-to-day now that the block is done. But once again, you heard it first on D-Street Chatter, of course. Now, Aditya, on this specialty chemicals, it's been a massive rally. It's in fact now become a big sector in itself. Do you like any stock in this space?
Yeah, so we are generally pretty positively biased in this space. I won't get into stock specifics, but as an overall theme, we fundamentally tend to like it. We just think that it's just one of those allocation shifts, from China to India, which is providing you this momentum. And you see it in the domestic market in terms of the consolidation and the formalization of the economy that's happened. I think it just tends to skew profits and growth and demand to a bunch of companies or sectors in this case. So I think that is a trade that can play out for a fairly extended period of time. We think the companies in that space are actually managing themselves reasonably well. And so to that extent, we do find a reasonable amount of comfort in these businesses and their ability to generate high earnings growth. What they're also backing themselves up with is a certain amount of investment that will basically, from a longer term perspective, support this growth, right? If this were to be in a narrower demand market, either only domestic or a few countries where they compete globally, rather than from a supply side shift, we tend to be a little bit more careful. But given where we are in terms of the shift to India, I think we can play this theme a little bit longer. So we would be comfortable. Valuations are on the higher side, so I think it's going to be hard to make the kind of returns we made so far. But directionally, it's going right. I think the sustenance of the earnings growth should be there, and the shift should actually tend to continue.
Okay, now this market is showing us who's the boss, right? It's the bull for sure. I mean, picking up so much pace. The mid-cap index is up almost 100 points. And just look at some of these stocks go. Apollo Hospitals is now at a fresh high of 5,000 rupees, been a phenomenal mover. SRF is at 10,000 rupees. I remember I mean, I think it was less than 2-3 years ago that this stock was trading around 2,000 or so, and it's been a phenomenal mover, SRF. Of course, this whole specialty chemical space, Aditya, has found a niche of its own, right? Not just SRF, but even some of these newer players. But just wanted to ask you about, the FMCG names, because so many are hitting new highs: Marico, Dabur, Titan. You think the time has come to put fresh money to work here? I mean, I was just discussing how Titan has sort of gone from 1,500 to 2,000 in no time, and now the wedding season is back as well. Your thoughts here?
Some level, at a portfolio level, we do have a slight underweight on them, simply because valuations are very, very high. And to some extent, the kind of momentum you've seen with these stocks in the last 1 month, provides you even less comfort in terms of being very aggressive here. I think where the value lies for these stocks at a portfolio level is the fact that from a demand perspective, those risks are lower, whether it is the more conventional staples or whether it's someone which is focused like Titan, right? I think the demand risks there are lower than other domestic discretionary demand pools, like whether it is autos, whether it is consumer durables. So I think in that context, we would find them safer to be with. We would find them more hedged given where the market is. But in terms of absolute returns, we just tend to be a little cautious of expecting too much. I think what you've also got to keep in mind is that they've struggled a little bit with input costs over the last 1 or 2 quarters, so margins have tended to take a little bit of a hit. That is something that is beginning to ease off. I think you will start seeing it progressively in their numbers. But I think the moves that you've seen in that space over the last month and a half suggest that the market is factoring that in. So it's a safer place to be in, but absolute returns will potentially be a little bit of a challenge.
Okay, got it. Aditya, before we let you go, the other buzz in the market is obviously insurance, particularly HDFC Life's announcement. Their board meeting is happening. They're looking to raise some money. How do you look at this fundraise, and overall, how are you positioned on the insurance space? What part of it would you back?
Okay, so I won't go into the details of the specific fundraise because I just don't have enough information. But as a team, we do believe they're in a sweeter spot at this point in time. One, I do believe, even though it's not shown in numbers, that the protection side of the business should tend to pick up. I think because there has been a reallocation of savings and a concentration of savings, I think there you will tend to see a certain amount of growth there also. And so to that extent, we like the broader space. I wouldn't want to go into the capital raise per se, simply because I don't know enough on it. But otherwise, as a theme, we do tend to like it. I think you've tended to see some performance come through in that space, and I think that will tend to stay. I think this is also one of those sectors that is just seeing so much structural efficiency coming out, both in marketing and in managing costs, that itself tends to give you a little bit of cushion beyond the broader pool of money that they have to tap into.
Okay, we leave it at that. Thanks a lot for joining us, Aditya. Have a great day. This market definitely is having a great morning. Just look at that. The Sensex is now inching towards 57,500 and the Nifty is holding pretty above 17,100. But this is important information that's coming to us from my colleague Ashmit. Sources say that Kumar Mangalam Birla has met with the telecom minister and is looking for some relief measures, some government intervention as well. Ashmit joins in to give us details on all of that. Ashmit, what's been transpiring at that meeting?
Well, as we've all heard and as we all understand, buyers are under considerable stress at this point. In fact, there seems